I am the CEO of Grant Consulting Services. I've been working with nonprofit organizations and businesses for the past 20 years to help them obtain grant funds. And I'm excited about COVID only because of the funding that's become available. That's the only reason. It's like the silver lining. So I've been able to help a lot more people in need, businesses and organizations. So I'm really glad for that. Some of my roles in the community, I serve on the board of directors for KOCT TV. I am a fundraising committee member with North County Philanthropy Council, and I am also the president of the San Diego chapter of the Grant Professionals Association. Thank you.
Awesome. Nichole, I'm coming over to you next, and then Silvia.
Hello, I'm Nichole. I am the founder of the Sash Bag, which is this thing right here. And also the founder, or one of the co-founders, I should say, of Lash.live, which is a live video sales platform. And I actually was doing a live sale a few minutes ago and had to sprint in here to the other office. And my computer was still in use, so I apologize for being on my phone and being the one that's like throwing everything off. But so if you see me doing this, it's because I'm on my phone. But I'm super happy to be here. Yes, I remember the event last year, and it's funny because I don't know if you guys remember that I kind of had to like bolt as soon as we got done because I was driving to Anaheim because it was my daughter's birthday and we were going to Disneyland and the next morning. And yeah, so who would have known that like that was the last time we were going to do that for a while.
You would not go to Disneyland ever again. No, I'm just kidding.
But yeah, so it's nice to be here again in this virtual format. I have a lot of experience with fundraising in different ways, angel, VC, SBA loans, all kinds of merchant cash advances, every way a human
You've done it all.
get money. I have done it. And I have also run 4 very successful crowdfunding campaigns, one that raised over $1 million, and then 2 that raised around between 300,000 and 500,000, and one that raised 80. So that's me.
All the information. I love it. Perfect. Thank you, Nichole. And Dr. Silvia Ma.
Hi, everyone. I also remembered last year was a great event and all in person. So I want to give you virtual hugs because I'm Latina and Italian. I want to just like hug everybody. So welcome. Thank you, Felena, for inviting me another year to this great event. And I know that NAWBO does such great work. So I always love getting the recap, right, of what you guys are doing. So great work. So who am I? I'm actually Felena's angel investor. How many years ago? Like 8 years ago, she was my second investment. So 45 investments later, I'm still only investing in female-led businesses and people of color, period. Is it a better business decision? We can talk about it later, right? So yeah, angel investor, venture capitalist. I invest my own money, but then I also am involved with a couple of different funds. Next Wave Impact Fund, which is an impact investing fund at Astra Ventures. That is more about gender lens investing. And of course, right now we're actively doing San Diego Angel Conference. I'm literally going from this to another event and seeing that. So the San Diego Angel Conference is an event fund where angel investors all come together and we invest collectively into 1, 2, or 3 companies. So we can talk about all of those things, but I've basically been an angel investor for about 8 to 10 years. And before that, I'm a recovering scientist. I have my PhD in biochemistry, molecular biology. I have an MBA. So know the strategy side and like the academic side, but also have helped run a couple of different businesses and accelerators, Cell Labs at Astra Ventures, an accelerator at UCSD and USD. So kind of seen the whole gamut of possibilities for entrepreneurs. So I'm so honored and blessed to be part of this panel.
Awesome. Thank you for being here, Silvia. Wonderful. Well, I'm gonna kind of stay in this rhythm of our lineup here. And again, please start throwing questions in the chat. So when we get to it, maybe 15 minutes or so from now, we'll start to talk through some of the things. And when we pull up your question, that'll be my cue. I'm going to go in order based on how the questions came in, and I'll call on you. You don't have to come on audio, video if you don't want, but if you do want, let's make this a conversation. So just I'm going to set the stage a little bit, and Karen, I'm going to come to you in just a minute, and I'll remember to pause. You know, I just want to kind of set the stage, right? There's businesses, and businesses oftentimes need funding throughout the course of their life cycle. And a big part of this conversation is going to be about that life cycle, because whether you're looking for debt, whether you're looking for equity, kind of two sides. I wish I had my whiteboard, right? But those are, in general, the two sort of, sides we're going to talk about. And a lot of times what I see in entrepreneurs, and I know all of you see it as well, I'll get an email, I'll get somebody asking me, like, I need money. I want an angel investor. I want to go raise venture capital. And I'm like, well, you have a PowerPoint. Okay, that's good. Like, there is a continuum as far as stage of business and what's going to be the right stage, and what type of money you would be looking for, and also the type of business you are, right? A lot of women get kind of pushed into this, oh, you're a lifestyle business, right? And, VCs don't want to touch you, and, that type of thing. So we'll, potentially talk about that a little bit, but I'm going to be as candid as I can. And I'm going to invite our panelists to be as candid as they are willing to be as well. I don't want to sugarcoat this, frankly. And I want to help you, depending on where you're at in your business, go to the right spot. So you're not beating down doors that probably are not likely to open for you. So Karen, I'm going to come to you first. You are on the debt side of the equation, right? So talk about, type of business stage, things as a bank that you are looking for, or your colleagues are looking for in funding a business. And I will hit pause. Recording again. Any additional kind of insights on this debt side of the equation?
I know Nichole probably has the experiential experience on that, but I know that Acción and other not-for-profits that are CDFIs, they do a fantastic job to walk you through what it means to have that business credit score, and walk you through what do you need to get ready. So before you try to do it yourself, because all of us women, there is a man here, so that's awesome. All of us women are typically the ones that are like, we can do it ourselves, and don't do it yourself, right? Go to Acción, or talk to an advisor, either at a small business development center, like the Brink or the Women's Business Center or Connect, that will allow you to say, okay, how do I do this? Not that everybody has that expertise, but they'll point you in the right direction to an advisor who will help you kind of fill that out. So that would just be my 2 cents as an operator of certain things like that. But anybody else who would want to answer that as well.
I just have a few thoughts regarding the CDFIs. I echo my colleagues here and think they are a great source for lending. And the SBA, for the second round of PPP funding, opened the funding window up initially to CDFIs before the traditional banks. So I think that they are trying to make sure that those type of resources are available to more small businesses. And that speaks volumes about how they are trustworthy organizations.
Mm-hmm.
Awesome. Any debt thoughts, Nichole?
Yeah, I'm not sure I have too much to add that would be meaningful. I mean, I definitely, agree with what everyone already said. Just for me, something I've noticed and that has had me pause on some of the debt structures is because sometimes the terms can be a little bit limiting as far as like how you grow your business and if you need additional funding or need to change the capital structure of your company. So it kind of locks you in a little bit more into, limited options. If you decide, to expand again or a different way and, need to bring in some more money or some more partners. So that's another thing to consider.
Yeah, great point. Yes, indeed. It gets complicated. Okay, so Valerie, I'm going to pivot back over to you. Let's talk about free money.
Free money, it's growing on trees, everybody.
There's a lot of it out there right now, with a lot of hoops to jump through, obviously.
There are, and first, let me just say for previous times and probably in the future, grant funding for businesses, there's really not a whole lot of money outside of COVID. If your business is working on renewable energy or research and development, sure, there's probably federal grants, maybe state grants as well. But for the most part, there are not. However, with COVID, there has been a lot of funding. As I'm sure you're all aware, we went through round one of the first stimulus act, and we are now in act number 2. So there's a renewed round of PPP funding. There's a little bit of EIDL funding, grant funding also available, depending on if you applied before. There's a lot of hoops there to jump through. And then for California-based businesses, there is also the state of California grant that's gone through one round, and they're about to go through round 2 for that. And then District 5 in San Diego County still has some funds available if your business is in District 5. So there has been billions and billions of dollars made available for small businesses and especially for solo entrepreneurs, which in the past that just hasn't been the case. So this has been an unprecedented time. And I think it's a great time too to build that business credit. If you get an EIDL loan, that's an SBA backed loan. So that that can help boost your credits, your business credit score as well.
That's a really, really good point. Something I hadn't thought about. Valerie, I just want to stay with you here for a little bit more, you know, as it relates to all of these grants that are out there, you know, what just generally should somebody have handy? I know each grant is slightly different, but what are you seeing some of the basic documents that like, hey, get these ready before you get into the application form, and because they are daunting.
Yes, they can be. So your financials from 2019 and 2020, your latest tax return, which they're accepting 2019 tax returns, but as we you know, move into the new year, they'll probably want to start seeing 2020 tax returns, and have your basic information about your company available, your EIN. I know that one of the grants required a copy of your driver's license and your social security number, and that's not really common for grants, but just have your basic business paperwork available, because you're going to have to send it in either for the application, or if you're awarded a grant, they'll ask for additional information like connecting your bank to their system, not just your routing and account number, but they'll actually want to make a bank connection so they can direct deposit the funds into your account.
Perfect. And then the last question, I saw this come up a lot in the chatter within the Hera Hub community, is, you know, some of these sites, especially with the PPP loan, because they were distributed through all these different avenues. I know I ended up getting mine through PayPal, which was part of Loan Builder, but I also applied through Funding Circle and a couple others, because at the beginning it was just like a land grab. Everybody was like, where do I go?
Right.
And you know, I got a lot of messages of like, this site doesn't even look legit. They're asking me to put in my social and all these things. Any just words to the wise of people who are, you know, like, I guess cautionary.
Right. And I think that's definitely necessary. Be cautious. I haven't heard of anybody being scammed, but you know, I'm sure people have tried to do that. So first of all, try to go to your bank that you have a business banking account with. In the beginning, that didn't work out very well with the bigger banks, because there was that land grab, like you said, Felena, and the banks just weren't prepared. This is a whole new program, and at the beginning, it was just mayhem. But now we've gone through one cycle, things have smoothed out, and so try going to your traditional bank first. And then if that doesn't work for some reason, maybe try a local credit union. And, you know, that can help bolster the local economy, which is great. And then there are some great sites online that we might not have heard of before, like Lendistry. I heard Square has a new site, and PayPal hasn't typically done grants or loans in the past like that. So check with a colleague or a friend to see if they have any experience. Have you heard of this company? Have you heard of that company? And just, check them out. And I don't know if there's one website that we can go to besides the state website for their state specific grant that lists all of the eligible funders. But that's something that you could do a search for just to make sure you're in the right portal and giving the right institution your business and personal information.
Perfect. And when we wrap up the conversation, Valerie, I'll have you talk about, I know you have guru hours, you're available to, for folks to schedule time with you if they have questions about grants. So we'll make sure to touch on that towards the end.
Thank you.
Yeah, of course. Absolutely.
I guess I'll just share a little bit about like the different things I've done and why. So when I first started out my company, I got an investor and gave up equity in my company for this investor. And the reason I did that is because I had no resources. I literally had zero resources. I didn't have good credit. I didn't have anything, no collateral, like nothing to go on, no sales history, nothing. So I really needed an angel to come in and support me. And I wound up over the course of time bringing in a handful of angels who have invested in my company in various ways. And then once the company got going, then we started looking at more traditional types of financing, like, the debt financing, and I've done Axion, I've done SBA, and we've taken on some of it, but again, some of them we've had to turn down because the terms were just a little too restricting. And we know for a product-based business, and one that we're kind of like in a pickle perpetually, because we have a manufacturer who is part of a government program in India, so he is not able to extend manufacturing terms to us. So typically a product-based business will be able to eventually fund itself with terms. So you can, order your product, get your product, sell it, and then pay the factory. Since we don't have the ability to do that, we have to have cash up front for everything that we produce, which creates a cash flow, a crippling cash flow scenario that's just this like roller coaster up and down. So it's not very attractive to the SBA and the big banks of the world. It's very fickle and scary. So that's where we've had to get creative. So once we got to a point where we really wanted to grow, that's when we started doing crowdfunding. So kind of kept trying to get over this hump of having enough cash to give to the factory and then like having to wait to get the product and then selling it. It's like this weird timeline. So that's when I started doing crowdfunding so that I could get, large chunks of money at one time to kind of move into the next stage of manufacturing, because, once I start producing like a different set of minimums, the structure changes. So each time I've grown my company or expanded, I've actually had the most success with crowdfunding, because it allows me to get all that money at one time, and then I can send it all over to the factory, and then I'm not tied to anything other than just delivering the product when I get it in.
So you have this product-based business, it requiring cash constantly, to do your manufacturing runs. Then you launched a technology platform. So I know there are a couple folks on the call that are doing a little more on that side. Did you get any funding for that platform?
Yeah,
talk about that.
Great question. Okay, so when I first started working on Lash.live, and it's funny because when I was trying to find investors for Sash, all I kept hearing was like, we want to, people want to invest in technology. They want to invest in technology. Now I've got a technology startup and I'm like, hey, technology, where's all the money? But when it started out, it started out as an idea. So, at that stage, it's friends and family. But I had, established myself as someone who can build a company. So I, put together a pitch and a presentation. I invited, people who know me and love me and was like, help me out. And I raised $120,000 and just, friends and family, giving away very, very, very small amounts of equity, like 0.5%. So that was one of the things I learned between the first business and the second business. And then I took that money and hired a development team and got the business to a point got through beta to a point where now we have data that shows, hey, if we do X, then Y is going to happen. So that we're able to now put together a more sophisticated pitch that with data to back it up, to show that we have a proven model that's going to make money. It is making money. We broke even our first 2 years of beta, and now we're out fundraising and we're pitching VC companies, and it's going quite well. We're right in the thick of it right now. So we're having those like second, third conversations. We've soft circled about 250 to 300,000 so far. But this is $1 billion round, and we're hoping to close it. We're hoping to close it at the end of this month, but it looks like it's going to be probably like mid-February. So it is a very different experience than what I had with trying to cobble money together for Sash, which is in the manufacturing space, like night and day, so different. Yeah.
Well, the direct answer to your question of when you should be talking to angels and VCs is now, yesterday, right? So it is a relationship build. So that's definitely something that it's not just, boom, I have a pitch deck, boom, I have this, and then I'm going to get this funding. I get a lot of women and men, let's say sign up for free angel access hours or anything like that. And they're like, so, you're invested in women. Why don't you just invest in me? I'm like, well, I only met you once for like 5 minutes and you just pitched me 2 minutes, and yeah, boom, I'm supposed to invest in you. It does take a relationship, even if I totally love you. I've been invested in Nichole, I've invested in Felena. So these two ladies, I mean, how many times did we meet each other before like the wire was sent or the check was written? Many, many times. I love them. Like, it's not like I didn't. I love their business. I knew their financials. It's like, great, let's talk a little bit more. Let's talk a little bit more. So people have asked me over and over again, how many times? And it's about 7 times on average for myself, right? Not that I want to make it arduous and hard. It's like, I want to be able to have a conversation with you. Pitch me by not pitching me. Like, let's have a cup of coffee. Can you talk to me? Can you talk to actually my colleagues? Because that's most important, right? I cannot fill your round. Right. And I'll define what around it, because Nichole used a lot of awesome words and we'll define all of them. So to be able to fill out around, I can't do it myself. I write checks that are typically $25,000 right now. Wrote bigger checks when I started off, I learned. And so smaller checks, $25,000 is the average of my personal. We'll talk about funds in a little bit. But to fill out a round that, let's say Nichole even talked about, maybe $1 million round, am I the only check? No. So I like to have coffee meetings and get to know the entrepreneur so that I can send that wonderful introductory email to another investor who I know specifically invests in exactly what that entrepreneur does, so that she has a higher success of access to capital. It makes perfect sense, right? But it is about getting everything ready. You asked Valerie too about like, what are the documents that need to be done? We'll talk about that too. But I've been seeing like all these synergies. So anyways, breaking it down, a little bit of definitions. So I've talked about rounds, I've talked about angel and VC and equity. So equity is basically you're giving away equity of your business to a investor. Now it happens in multiple different ways. It can be done by a lot of different instruments, and instruments are just like documents, right? In essence. So the documents could be a safe, it could be convertible note, it could be equity just straight out. I've seen a bunch of different ways. So safe, I hate safes, first of all. So, but they are very typical of like Y Combinator and Techstars. So anybody who's gone through like an accelerator that is like a woohoo accelerator, there's a lot of other accelerators out there, but those are the woohoos, right? So if you've gone through that, you have kind of a stamp of approval saying you've gone through something, therefore you're okay to do a safe. And a safe is great for the entrepreneur. It's basically, give me some money, I'll give you something. That's basically what it says. And what do you think about an investor? They're gonna be like, and what do I get? Like, I'm sorry, it's high risk is angel investing, and you're not giving me anything. There's no return on anything. What the heck is that? Oh, just because you're Techstars? Wait a minute, right? So Techstars and Y Combinator are awesome, right? But it's just like that thought process of safes. A lot of investors don't like safes. Some investors are okay with it. I'm not. Convertible note is basically you're converting to another round. So as soon as that next round is, and a round means just have a set of money that comes in. Another round is a set of money that comes in. to be completely like clear. So as soon as that next round or that next set of money comes in, I get that as an investor, I get that convert into that equity piece, right? So it's very important about the next round, how much I'm going to get as that converts. So hopefully that kind of clarifies a couple of the words that Nichole used and stuff like that. And then her tech company as opposed to manufacturing. So kind of giving you, she gave you like the experiential awesome. I loved factoring with her. So that's one way of like an angel investor can factor. If you have a manufacturing run, you look at the revenue and what they're doing, you can as an investor invest as a factorer. Banks also do this, but they require, as Karen said, a lot more rigorous stuff to hand in. And of course that comes with more, it de-risks also for the entrepreneur. So the entrepreneur has to be okay with somebody like myself, a private person doing it. Again, that's why I say start that process yesterday, because the relationships are really important. So that's a little bit of that. You asked about like VC wise. So the reason why I say I'm an angel investor and venture capitalist is that the angel investing is really, really earlier stage, seed round or pre-seed, right after friends and family. So we're looking friends and family, pre-seed, seed, series A, B, C, D, E, F, G. Right? EFG is mostly the life sciences. They need a lot of more rounds to fill to be able to grow that company. So that's why I said an angel investor in VC, because as an angel investor, I look at very early stage companies. And as a VC and the Next Wave Impact Fund, we're looking at companies that have traction. They have a great management team. They have a team of 4 to 5 people. They have people that are on salary or they're doing sweat equity. They have momentum. They have either letters of intent, which are just documents from partners saying, yes, I'm buying from you in a future time. All of those things are kind of put together a little bit more, a little bit further along between seed and series A. So that could be like, there's an open round or a bridge round. A bridge round is basically a bridge from seed to series A. Not a big deal. Just that's the vernacular that we use. So the VC round is about $100,000 to $200,000 wire and or a check. Now, a true Series A could be from 500 to 1 million. So that could be like the Series A or 5 million. Those are bigger VCs, but the small VCs that I work with are about $100 to $200,000. I think I'll stop there, but I think that covers everything that you were asking about.
Yeah, perfect.
Oh,
yeah, absolutely.
I didn't want to connect one more thing because Valerie said something. I had it written down and I just forgot. The reason why Valerie is so important to an angel investor and what she does is that it de-risks any investment that I make. So even if you got a PPP loan, it's like, oh, she had all her stuff together. Okay, then let's talk about an investment. Or I got an NIH SBIR, which is NIH is National Institute of Health, Small Business Innovation, something, I don't know what it's called, SBIR, STTR. But it's a big thing for a life science or a tech company, right? Or any other kind of grant or loan that you get, you know, 2 things. Soft-wise, you got your stuff together, right? You were able to fill out a form. That's like check mark. Secondly, is there's some kind of like person saying a seal of approval, NIH or somebody else saying, I gave you a grant because like in that industry, you were good enough to get this grant. That again, reduces the risk for an angel investor. And they're like, I'm in, right? So Valerie is super important to, let's say the pre-seed friends and family seed round, super important to get that in. So I wanted to kind of connect the dots between the 2 of us.
That's perfect. And I want to connect one more dot before we go to questions, which is back to Nichole and crowdfunding. I have heard, Silvia, I'd like your opinion on this. Similar idea, like if you can go out, you know, again, product-based business, a bit different, but you can go out and get a bunch of people to give you, you know, $150 ahead of time before they get their product 6 months from now. That's also some proof of concept. Do you see it that way?
Yes and no. So I would say for me, I'm going to give you my microcosm of me and then a little bit about the San Diego Angel Conference and other angels out there. Crowdfunding versus equity crowdfunding. So equity crowdfunding, like platforms like WeFunder, is actually based in San Diego. They've helped a lot of San Diego companies do equity crowdfunding. I would pick a platform that has a good reputation like WeFunder. So a lot of investors do like that. because it is kind of setting up all the equity stuff, like all the due diligence room, you have the deal room, and the due diligence needs to be done for the platform. So you're like, check mark, they got everything done for the equity round, right? So really great. And you have a couple of investors, you know that there's some non-accredited and accredited investors that are in WeFunder, which is important, because then it's like, okay, but the important thing is that WeFunder comes in on on your cap table, it's just WeFunder. It's not like a bunch of non-accredited and a bunch of investors on your cap table, which is capitalization table. It's just basically saying how many people are in your company, how many percentages do they have. So that's important for like a platform and for that equity crowdfunding. Angel investors like that sometimes and don't like it because of that non-accredited angel investor, because then that kind of sometimes gets a bad rep and stuff like that. On the Kickstarter side, crowdfunding, it's more product market fit. So it's a completely different kind of thought process of saying, I do have product market fit. There's people who want this. Now, some of them could be investors, but that's a very small amount, right? It's not that you have investors that are doing Kickstarter. It's more of like the customer is there, and there might be some customers there that become investors, maybe. And then the investors that are seeing after crowdfund, they're like, okay, they were able to do it. They were able to get customers in, great, product market fit. Then it's more of like, could they fulfill? Because there's like 2 or 3 of my own portfolio companies that couldn't fulfill their Kickstarter, but I already invested in them. But that could be something that after they Kickstarter campaign, they didn't, and then they're asking for funding to actually cover that. That's a red flag, right, for investors. So it's a little bit of great. If you do great like Nichole did, woohoo, like that's amazing, right? You want to invest in her. She got it done. She got her video done. She got all these customers. She was able to execute and deliver on the promise. Done, right? That's like a huge check mark for angel investors, and that she was able to get that done.
Awesome. Love it. Thank you. Super, super, super helpful. Okay. I'm going to go to questions here. So the first one I see, and I'll scroll through again in case I missed one, because maybe I'm just looking at the chat, is Wendy. Wendy, you asked a question, and if this is no longer relevant, because it was a whole 30 minutes ago, feel free to ask a different question if you want. But your question was, when you apply for business credit, are all founders listed or only certain founders? Anybody feel comfortable taking that question? And or Wendy, feel free to come off mute and say, I have a different question.
I can answer that one because I deal with this all the time. I have one shareholder in my company that owns more than 20%, and she has to go on everything. So 20% is the cutoff that anybody that owns more than 20% has to go on stuff.
Nichole, 2 things. One, I've heard that crowdfunding is relatively ineffective without a substantial social media reach to begin with. That was one question. The other one was, I have clients that say, well, I'm going to go get crowdfunding for a service-based company. I've also heard that crowdfunding is not an effective platform for service-based companies. And then the third question I had further down was, what was the initial investment? I have heard that video plays a very large role in an effective crowd funding campaign. And so what's like in a marketing assets and video that need to be as an upfront cost? I think they can just jump on the Kickstarter and all of a sudden get $100,000, which is not really the thing. So if you could speak to that, that'd be great.
Yeah, I would love to. Yeah, because this is a conversation that I have frequently, and had it this morning with somebody who was like, I'm going to do a crowdfunding campaign. I was like, cool. How many people do you have on your newsletter list? 10. Okay, please don't do that. So you said, you have to have sizable social media. That's one way. But social media is also kind of like a generic term now. I would say it's more about having a community. So where do you have a community of people who aren't just your friends, so customers? If you're going to have a crowdfunding campaign, my advice is to establish a customer base first. And that might seem, I feel like all of these things, right? Like loans and angels and crowdfunding, like you're like, but what if I haven't created that yet? But really, if you want a successful campaign, you have to create that some way, somehow. What I did is I went out to farmers markets and festivals, and I just like hit the pavement, met people, sold my product, got them on my email list. So I wasn't even paying as much attention to my social media. I mean, I was doing stuff on social media, but I was really focused on building my newsletter list, building my customer base. So wherever you're going to communicate with your customer base, it's important to build that up first. My first campaign that I had that raised $81,000, I think my customer base at that point was about 3,000 people. It took me a couple years to build it up to that point. And again, that's not saying that's exactly what you have to do. There are definitely people who create something and then they go out and they hire an agencies that have their own lists. So that is an option as well, but they're going to take 25% of your campaign, plus you have to, pay them up front. So that's a whole investment in itself, which makes you start to wonder, like, why not just put your own marketing campaign together if you're going to have to come up with all this money? As far as an upfront investment goes, I think in my first campaign, it was $5,000 that I spent on the video. And then another probably $3,000 or $4,000 that I spent on advertising. My second campaign, I spent $10,000 on the video because it was way more complicated. And then I spent, I want to say probably around $10,000 to $15,000 in advertising, but that campaign raised over $1 million. But that was because we raised $250,000 in the first 24 hours with no advertising, because we had a Facebook group that had at that point it had about 4,000 people in this Facebook group. And then we had, I think at that point in time, maybe around like 50,000 fans on our Facebook page. And these are people who were very engaged. So don't let the numbers, don't attach too much meaning to the numbers. It's more about the engagement. Having a smaller group of people that are highly engaged is more valuable than having like hundreds of thousands of people who don't give a crap about what you're doing. So it's really about, building that community base of customers who care about you and your business. That's how you're going to have successful crowdfunding.
And what about social or what about service-based companies?
Service-based companies, I mean, the thing is, crowdfunding campaigns are attached to rewards. And they're also rely on excitement, right? Like people it has to be something they haven't seen before, or some reason that they couldn't just go out and get it from someone else. That's what you'll see in the successful campaign. So I know I'm speaking in absolutes here, like these are all right and wrong facts, but you get it. So yeah, I mean, people need to be inspired. It's got to be like, whoa, I've never seen that before, or, willing to part with their money and then wait for a reward.
Mindy Bortness asked a very good question about NDAs. Very trusting you are, Mindy. Like, what's the right time? Maybe, Mindy, you can give some context to the question if you want to come off mute.
Yeah, it's just literally, and maybe women also are a little more trusting. So it's where do you put in that aspect, or do you at all, as you're sharing your new concept or your business plan?
Yeah, Silvia, you're probably very well poised to answer this question.
I've been furiously answering everybody's
perfect. Thank
chat,
you.
so I did answer it already. But it is a longer discussion. For myself, I rarely sign NDAs, as I said in the comments. Out of the hundreds and thousands of entrepreneurs that I see on a daily basis and advise freely, never have signed an NDA. All my 45 plus companies I invested in never signed an NDA. And whenever like our angel group or VC, kind of reviews things and we go through due diligence, never sign an NDA. So we don't really sign the NDA, because we're looking at, let's say, if you're going to pitch at a competition. Again, I know you asked about business plans, so I will go into that. A pitch competition, I always say you should not be putting out there anything that needs to have an NDA, right? No patents should be on there and stuff like that. And if you get to due diligence, the patents are all available on the public domain. So really, you're not really saying anything that nobody can get otherwise. the second kind of big strategy kind of component to all this is that as an investor myself, and I'm just kind of microcosming into the investor kind of journey, is that if I sign an NDA, I cannot talk about your company to anybody. So the network effect is gone. I can't syndicate. I can't share due diligence. I can't write treaties. Usually whenever, so all of that, it's like syndication means I basically invest in somebody and I co-invest with somebody else. And that's basically a syndication, is that I ask them, hey, here's my due diligence report. Would you want to invest in this person? Usually if you are sharing a due diligence, you're always writing a treaty between two angel groups or two angel investors. We just sign basically saying, the information that I'm giving you is what we know. I'm not giving you the recommendation to invest. You cannot sue me, really. So if I sign an NDA, I can't even sign that piece of paper. So you're really like cutting me at at my trunk, basically. And I can't talk to you. I talk to anybody about it. So that's my 2 cents about NDAs.
Okay, thank you.
Super helpful.
appreciate
Thank
that.
you, Silvia, for elaborating on that. I appreciate
But
it.
I wanted to just the trust piece, Mindy, though, right? So that's a microcosm of just an investor. There's a certain amount of trust that you have with investors. Again, don't go after like these investors that are going to, like, if they want to be board chairs and like you need to pay them $1,000, because I've seen that. Never do that. Never. So, but somebody, if somebody wants to see your business plan and that is all that you have because you're a service-based business, I would just be careful, right? It's not that they have to sign an NDA. I mean, anybody can be a service-based business out of whatever their expertise is. Your moat and your unique selling proposition is you. Nobody can duplicate you. So, I mean, I know Felena and I always talk about it whenever we've done our strategy sessions with people, is that like, yes, China can copy you. Get over it. Like, move on. Like, try to get other moats and other things that you can get outside of an NDA. So that's just like my 2 cents on that end.
Perfect. Awesome. And Nichole could talk for days about people copying her. So
Yeah. So, but Nichole has other, yeah.
Well, we'll save that for another conversation. We've got about 15 minutes left, so I want to get to Nikki, guest of Debbie Feinberg's. Nikki, are you at a point where you can come off mute? And I'll just.
I am.
Perfect.
Hi, so I'm a tech startup, basically a digitized health platform. We actually built a medical device because we thought that was more fundable in the early stages. And so we've gotten a few institutional funds. We've taken out a couple of loans. We've had some interesting accelerators, free services, calls with legal, IP, all that FDA stuff. But we're getting to the point where we need the cash to hire the data analysts and the people that actually change the data that comes into the system and then spits out the predictive and preventive advice. The issue I'm having is that the typical VCs that would look at something like this don't want to invest in preventive care because the typical system is sick care. We treat symptoms or make drugs, and this is just the opposite of that. So we're turning an industry on its head. And I think that there's like longevity and wellness people, life extension people that are interested, but I haven't been able to gain any interest in getting the real bucks in. So I'm trading in tokens right now, which is very interesting. We're exchanging tokens with staff on demand. So I'm getting a little bit of attention there, but I don't think that's going to go as far as it needs to.
Silvia, I'll let you tackle this one if you don't mind.
I don't know, Nichole, do you want to comment on that tech platform or you're good? You want me to take it?
I guess I'm not sure what the question
Okay,
is.
I know
so
the question.
go ahead.
Yeah. Yeah. So I would dissect it a little bit more. So it's, I know, of course, I just heard like 2 seconds of a question and I read
Right.
your chats, right? So, okay, give me some grace there, right? So, but it's, yes, the market is something that VCs see. They see that it needs to be some kind of therapeutic or something like that. But there's like 5 other things that they're looking at. They're looking at your team. They're looking at the management team. They're looking at, you know, what are the traction that you have been able to accomplish, even if it's a little bit. So all of those things are the things that I would be focused on those things. If everything else is just not working, I would say, hey, how do I build the best team, advisors and all that, that they can work for me? So advisors and mentors and let's say scientific boards are there have to like lend some great expertise, but half of it is to introduce you to investors. And if they're not,
Okay.
or you have to find a financial advisory board or something, because then that will allow you to get in the door, right? Because right now you're saying you're hitting because people don't understand what you're doing. It's kind of go about it the other way, right? Of saying, okay, so we need to get letters of intent. Do you have letters of intent? Oh yeah, I do, or you do not. So kind of break it down that, which I know we can go on and on for hours on that, but I would just say kind of shift that focus maybe a little bit. Yeah, Debbie is saying too, storytelling is very important. I think Valerie would also echo that as a grant writer, is the storytelling and the arc, and how do you present yourself? How do you show up? How do you get introduced to investors? That's all part of the game. It is a game, right? It's a game, and if you play it right, you get somewhere, right? So that, again, like, I know that it's a super small like fraction of what you're doing, but hopefully that helps.
Thank you. I appreciate that.
I'd like to jump in really quick too and say that
while you're holding off the cat.
yeah, sorry. No one wants to be around me unless I'm on a Zoom, right?
I got a dog back here, so
yeah. Okay. I think it would be worthwhile to look into CDC or NIH for federal grant funding. I don't know with certainty that that would be available because I don't know that much about your company, but certainly technology they're funding lately. And if it's anything to do with COVID, or if you can make it COVID related, there are certainly funds available. And with the second wave, almost all of the departments or the cabinets of the federal government are getting renewed funding. So that
Good
could
point.
be some potential for you.
Okay, thank you. I appreciate that too.
best ways to get in touch and talk about Guru Hours.
I have a Facebook company page and I'm on LinkedIn, and I put in the chat box a link to my calendar for the grant and contracting Guru Hours. And we didn't even talk about government or contracting with a company. So maybe we'll have to do a whole
nother event, yes.
And email is Valerie, Valerie, at grantconsultingservices.com.
Perfect, awesome. Nichole, like, follow me on.
I know, I'm like, wow, you guys are so generous with your contact information.
I know, I was
I'm like, you could, I like LinkedIn.
Yeah, LinkedIn. Okay, perfect, easy peasy. Sylvia?
I already put in there a Calendly link for strategy office hours. They're all free all the time, 30-minute sessions, book 1, 2, 3, 4, 10, whatever. I sometimes see people week after week. LinkedIn is my preferred platform, but I'm also on Instagram at SheInvests100, or on Clubhouse, or on Twitter, or on everything, Facebook, LinkedIn. So you can get a hold of me, trust me.
Easy to find, I love it, awesome. Well, ladies, thank you so much for your time tonight. We really, really appreciate it. And thanks for everybody who attended, and we'll look forward to staying in touch. Please, please let us know how we can support you.